Snowflake's latest earnings report has sent the stock soaring by 20%, validating a buy signal. This is the kind of opportunity we aim for, spotting undervalued stocks before the market catches on. In this analysis, I will break down Snowflake's results, evaluate its growth potential, and determine if it remains a strong buy. So like, subscribe, and let's talk Snowflake. Snowflake, the data powerhouse, has released its quarterly financial results, sparking a rally in its stock price by as much as 20% after the market closed on Wednesday, November 20th. Now, let's zoom out and take a look at the bigger picture. Snowflake operates in an expensive and rapidly growing market. According to their management, the market was valued at $152 billion in 2023, with projections suggesting it will more than double to $342 billion by 2028, just 3 years from now. This growth is unsurprising, given that the data is the backbone of artificial intelligence. Snowflake's quarterly product revenue showcase solid growth, increasing by 29% year over year, while fiscal year 2024 product revenue saw a 38% rise. What's truly impressed, however, was the company's growth in remaining performance obligation, RPO. For those unfamiliar, RPO represents future revenue from contracts Snowflake has already signed. When a customer signs a 5-year contract, $100 million worth of contract, it first gets recorded as RPO before converting into revenue as services are delivered. Snowflake's RPO grew impressively, jumping by over $500 million from $5.2 billion in Q2 to $5.7 billion in Q3. This marks a return to robust growth in its metrics after a few slower quarters. Such growth signals strong demand for Snowflake's services, supported by the signing of significant new contracts. Another highlight was Snowflake's net revenue retention rate, which stood at an impressive 127%. This figure means existing customers spent 27% more with Snowflake in their second year than in the first year, a strong testament to the value Snowflake delivered to its clients. While these retention metrics had been declining for several consecutive quarters from 135% to 127%, it has now stabilized. This plateau could indicate that the downtrend is over, and the retention rate may either hold steady or improve in the future. Turning it to profitability, Snowflake, though not profitable under GAAP accounting, continues to generate strong cash flow from operations, funding its growth effectively. Non-GAAP, non-GAAP operating margins climbed to 8% in fiscal year 2024, a marked improvement from 5% from the previous year, and significant turnaround from -3% the year before that. Similarly, non-GAAP cash flow margins rose from 12% to 29% over the past 2 fiscal years. Looking ahead, Snowflake raised its fiscal year 2025 forecast, projecting $3.43 billion in revenue, which represents 29% product revenue growth year over year. However, some headwinds remain. While revenue projections were upgraded, product revenue growth has decelerated over recent years. Furthermore, non-GAAP operating margin and free cash flow margins are expected to decline after years of improvements. These challenges, combined with Snowflake's valuation, explain why the stock faced pressure in 2024. It's also why this, in my opinion, is an opportunity for this stock. buyback in August, when the share price dropped from 250 to around 110 to 120 per share, Snowflake finally offered an attractive valuation. At that point, it transitioned from being too expensive to compelling buy for investors. Following this latest earnings report, I still find Snowflake valuation reasonable, trading at the price to free cash flow ratio at 52. While not a bargain, this valuation remains attractive given Snowflake's strength. That said, the stock faces challenges such as slowing revenue growth and margin pressures. For this reason, it could be a buy, leaning closer to buy than hold, but not a full-throated buy. And now, ladies and gentlemen, let's dig in Snowflake's chart. So we have on the right, we have weekly. On the left, we have the daily chart. Let's start with the weekly. We can see since November of 2021, 3 years of a massive downtrend, more than 80%, around 73%, all the way back to September and August lows. Now, in this week, 36%. Did we miss Snowflake's SNOW? Snow is the tiger. Did we miss this bull run? In my opinion, not even close. We need at least 3-4 days closing above the 174. As you can see, this is how it looks on the daily. Closing above the 174, 175 will send Snowflake closing this daily gap at the 226, and then we might go all the way to 241. So if you feel FOMO, if you feel missed out on Snowflake on the technical side, we still did not see anything. Once again, we need to close at least 3-4 days above the 175 area, and then technical bullish on all time frames. So once again, thank you very much for watching this video. I do hope you find it helpful, educational. If so, like, subscribe, check the links in the description below for more educational resources. Until the next video, stay safe.